But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
So, and I said, well, what if it does happen? And he says, well, price will solve everything. I said, thanks, give me the gold.
Why do central banks hold it? Well, it's a form of reserves. So why don't they hold diamonds? Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Good evening, everyone. Welcome to the Junius Maltby channel. Today it is myself, Mrs. Maltby, accompanied by the Ann Cat, as always. Now, I'm hoping my nasal decongestant will kick in here soon enough. Junius and I have been sick this week. I think I took it harder than he did. Sore throat, fever, chest pain, body aches, overall fatigue. So it's certainly been pleasant, and our household has been definitely under the weather. So what I will be doing today is actually reading to you all an article sent in by one of our friends and followers on the channel, Call of the Wild. Thank you, Call of the Wild, for sending this in. It's a great article. It's from a website called oroinformacion.com, translated to goldinformation.com. Now, the article is in Spanish. I've done my best to translate it to English. However, I did not post the screenshots of it in English. I wasn't able to find any where it was done correctly, I suppose. So I just thought it was easier for me to quickly go through, as Spanish is my first language, and translate it myself. If any of you guys want to send in articles, feel free to do so. You can send them to myself, or you can send them to Junius at our respective emails. We appreciate your research, your input, and we consider you part of the Maltby clan. And sometimes it's good to have eyes and ears all over the place in your respective countries and get a different take on things. So this is definitely a website that I will be referring to more often and translating articles from. All right, thank you again to our friend Call of the Wild. Let's get into the article here. México se queda sin oro. Su casa de moneda ha dejado de vender el bullion centenario. What does that mean? Rest assured, the rest of this will be in English, and it translates to, Mexico runs out of gold. Its mint has stopped selling the centenary bullion. Fascinating times. So let's get into the article, briefly looking at a Word document here, which I took a look at this. Trust me, Google Translate does not help, especially for a native speaker. It does not help. So, all right. The Mint of Mexico, which administratively depends on the Ministry of Finance, but whose merchandise is obtained mainly from Mexico, affirms that it does not have stocks of the precious metal, and therefore will not sell gold coins for the remainder of the year until 2021. It is the well-known economist and analyst Guillermo Barba, who in his blog has just published his opinion on the matter based on a doubt. Do neither Banxico nor the CMM really have these coins, or do they not want to sell them at the current low price? Would they prefer to mint metals that are sold at a premium compared to their metallic value and that are not an option to invest? In any case, the truth is that investors and collectors who wish to cannot purchase official precious metal coins from the institution responsible for minting them, the Mexican Mint. Incredible and regrettable, says Barba. Add to this, quote, shortage that commercial banks, some of which publish the centennial price on their portals, never have coins available for their customers at their windows either. If you don't believe me, I invite you to visit any branch and try to buy a centenary round. Good luck. That is why I call the prices published by the banking institutions, quote, imaginary prices of gold, because at that level, it is simply not achieved. The Mexican analyst assures that buying gold in cash in Mexico is an odyssey, which already says a lot. Few are the daring who dare to sell it in the current fragile conditions of economic depression, forced not so much by the coronavirus as by bad decisions of the government. And whoever sells their gold does so at a much higher price than the, quote, theoretical price that we see in the futures market. So there is actually always gold available at the right price. You just have to pay the price demanded by the seller, says Barba. Since gold is the measuring rod of value, the real money against which all the currencies of the planet are measured, the price of gold in the physical market is the indicator of the true value of each national currency. In this case, the Mexican peso and any other form of fiat money. From it, we can also estimate the, quote, implicit exchange rate of our currency against the dollar. This conversion rate is a guide to what to expect in the near future in terms of losing our purchasing power. Those of us who are in contact with the real market, which occurs between individuals, people, and companies, and we bring the pulse of it, we know that the I'm trying to say this in English and Spanish at the same time. The Centenario investment coin is available to the public these days between 54,000 and 58,000 pesos, $2,564 and $2,754 respectively, which gives us an implicit exchange rate between 24.08 and 25.40 pesos per dollar. Perhaps that is the reason that CMM does not want to sell gold. It is at a dead end, adds Guillermo Barba. Making centenarios available to the public at the low price, the quote, official price, would imply for the Mexican mint perhaps selling at a loss and running out of gold, since everyone would buy it there in mass. On the other hand, offering centenarios at the real market price or higher would imply that the government of Mexico itself recognized a de facto devaluation of the peso due to the implicit exchange rate that we have explained in this article. Because of the above, I have serious doubts that CMM will sell centenarios or any other official gold coin in 2021, concludes Guillermo Barba in his denunciation of the anomalous situation that is being experienced in Mexico with his centenario gold coins. So there you have it. That is the input from this Mexican analyst and his thoughts on why this is occurring in Mexico with their gold. Junius is not here. I'm sure he would have more input on this than I perhaps do, but I figured I would get this article out to you all. You're more than welcome to have your input here in the comments or even in the live chat. And I will be reading to you one more article actually from this website, oroinformacion.com. So let's move on to the next one here. Más de la mitad de los ciudadanos rusos se plantean invertir en oro, según una encuesta. Translated to, come on, Word document. More than half of Russian citizens consider investing in gold, a survey finds. Russia maintains a strong relationship with gold as a producing country and as a consumer. Its central bank has been the most active in increasing its reserves in recent years, and its citizens are clear about the value of the metal. A recent survey reveals that 75% consider gold as a long-term store of value, and almost 60% are willing to invest in the precious metal. A report just published by the World Gold Council confirms the importance of the precious metal for Russian citizens, who are willing to invest in this asset and see it as a safe haven and long-term store of value. In its presentation, Tatiana Fick, Director of Central Banks and Public Policies of the World Gold Council, recalls that gold mining in the country began in 1745. and that a century later, half of the production was extracted in Siberia, and that at present, Russia is one of the main producers of this precious metal. On the other hand, gold has played an important role in the country's strategic reserves since Emperor Peter the Great created the first state treasury, consisting of coins, jewels, and gold nuggets as a national reserve in 1719. Its inheritance has been collected by the Central Bank of the Russian Federation, which in the last 15 years has acquired more than 2,000 tons of gold, becoming the most active central bank in the world in the purchase of precious metal. However, in terms of investment in gold by citizens, Russia still has a long way to go. According to Tatiana Fick, our research has found that although there is healthy demand for investment gold, only 16% of Russians currently own it. The 20% VAT or VAT borne by physical gold, the highest rate in the world, has impeded the growth of the investment market. But there are reasons to hope that this situation will improve. The expected abolition of the VAT should revitalize the market and unleash a flood of investment. Indeed, the issue of VAT on gold has so far weighed down the investment market for this precious metal in Russia. In fact, gold is the sixth form of investment in this country in the last 12 months, 16%, behind savings accounts, 74%, foreign currencies, 38%, real estate, 33%, life insurance, 31%, and cryptocurrencies, that's the word, cryptocurrencies at 17%. According to the World Gold Council, the situation will be reversed as soon as the 21% VAT levied on physical gold is canceled. The report reveals that despite not being one of their main investment formulas, Russian citizens are very aware of the qualities of gold. The results of the survey carried out by this organization reveal that 75% of those interviewed believe that gold will never lose its value. The 68% think that it provides protection against currency fluctuations and inflation, and 52% trust more in gold than in foreign currencies, and 66% of those surveyed or questioned believe that gold offers long-term security. In addition, the report offers an encouraging data regarding the future. 57% of those surveyed who have never invested in gold before have indicated their intention to invest in this metal in the coming months, a percentage that far exceeds the global average, which is 38%, according to other studies carried out by the World Gold Council. And that was an article written by Jose Angel Pedraza. So again, more than half of Russian citizens consider investing in gold. Moving on to the next one here. JP Morgan cree que una victoria de Biden en las elecciones haría subir el oro hasta un 5%. JP Morgan believes that a Biden victory in the election would raise gold up to 5%. So what do our tiny hat friends at JP Morgan have to say about this? A few days before the U.S. presidential elections, which are to be held on November 3rd, analysts place their bets and argue what they believe would happen to precious metals in the event of victory for each of the two candidates, the Republican Donald Trump or Democrat Joe Biden. Sleepy Joe, pedophile, whatever you would like to call him. The latest prediction has been made by investment bank JP Morgan, whose analysts believe that a, quote, blue wave in the presidential election by the Democrats of Joe Biden could cause a rise of up to 5% in the price of gold. Specifically, the JP Morgan metals analyst Natasha Koneva estimates that if the Democratic Party reverses Let's start over. Specifically, the JP Morgan Metals analyst Natasha Kaneva estimates that if the Democratic Party reverses the current situation, there could be a rise in the price of gold that they estimate between 2 and 5%, which would be a kind of reflex action before the further weakness of the dollar and the decline in bond yields. Thanks for your patience on translating this, by the way. The price of gold has soared this year thanks to the support of investors who have flocked to this traditional asset haven to escape the instability of the markets caused by the COVID-19 pandemic. In August last, an ounce of gold recorded the highest price in its history, the USD $2,075, but since then has lost some of its value, trading now in the vicinity of approximately $1,900 an ounce. Analysts as a whole agree that a Biden victory would cause capital markets to plummet due to the negative reaction of investors to the Democrats' fiscal and regulatory agenda, which includes tougher measures. This would lead to a rise in the price of gold, according to JP Morgan. However, analysts believe that the rise in the price of gold due to Biden's presidential victory and the triumph of the Democrats in Congress would be only temporary, as the spending stimuli provided by his government would accelerate the growth of the economy. Remember, money printer, go brr. We believe that the initial upward movement in the price of gold would be short-lived, since the victory of the Democrats in the elections could mean the arrival of an important package of fiscal stimuli, which would trigger the growth expectations of the economy to short term and would cause a rise in bond yields. In the event that Biden wins the election, but the Republicans retain control of the Senate, analysts forecast a 2% increase in the price of gold. Instead, a Trump victory could bolster the dollar and cause gold to lose as much as 5%. A disputed result would benefit the price of the metal with an increase range of between 2 and 5%. In the long term, analysts are pessimistic about the price of the metal, as they believe that fiscal stimulus and the monetary policy of the Federal Reserve could trigger a downtrend. Although a blue surge could mean adding a short-term price rise to new medium and long-term expectations for gold, we believe that Federal Reserve policy and inflation expectations will weigh more on yields of gold, long-term bonds, which means that we maintain our long-term downward outlook, especially if the focus of the markets is on stimulus, the report said. Well, one thing is for certain. It doesn't matter who wins. America is careening on a path of no return. And that is something that has been spoken about in numerous videos on this channel for months now. Don't let your guard down, no matter who wins in a couple weeks here. Every man for himself, and just continue with your stockpiling, continue with your preparations, and always assume the worst. It's gotten to a point, as you know, in this country, it's definitely a civil war of sorts. It's a culture war, and no candidate is going to fix the division that has occurred thus far. So while it's important to look at this and the talk of gold and the dollar or any fiat in that sense, don't lose sight of what's really going on. I mean, it needs to be said, anybody who finds or believes in the competency of the FBI at this point needs to reevaluate their thoughts and needs to take a closer look at what's going on. And that's been an issue for a long time with the Federal Bureau of Incompetency, any of the three-letter agencies really, but the FBI has been the most blatant and outward about it. So just take a look at those, quote, conspiracy theories a little closer and really decide on what it is and who it is you want to believe in these next coming weeks and months. Doesn't matter what part of the world you are in, honestly. All right, and lastly here, speaking of the three-letter boys from our favorite agencies, this next article talks about what Christopher Aaron thinks silver is going to be like. Background on Christopher Aaron: he's the chief analyst and founder for iGold Advisor, and he began his career, looks like, as an intelligence analyst for the CIA and Department of Defense. So that's who that guy is. I always laugh about words like intelligence in the three-letter acronyms there, the CIA in particular, because anyway, okay, I'm not going to go on that tangent here. All right, so what do we got here? Christopher Aaron pronostica que el precio de la plata llegará a más de $30 in 2021. Christopher Aaron forecasts silver price will hit over $30 by 2021. The price of silver rose almost 163% from its lows in times of coronavirus panic, from $11.30 in March to its August 6th peak of $29.82 an ounce. However, after that incredible rise, silver has fallen dramatically from the summer high to its next September 23rd low of $21.64, which was a nearly 28% drop in just 6 weeks. Right now, the precious metal is trading in the mid-region of that range at $24.60. An analysis by Christopher Aaron suggests that silver is in the midst of a broad and volatile consolidation that will resolve to the upside in the coming months. As investors in precious metals, we have a unique benefit in our toolbox, or our analysis toolbox, as we can compare two historical money metals against each other, silver and gold. And yes, both metals have served as stores of value for the past 5,000 years. And while the focus of this article will be on silver price forecasting, we must use our knowledge of gold to increase our understanding of its wilder cousin. Aaron begins his analysis. The important point to understand about gold is that it is currently retesting its break above its old all-time high resistance zone, dating back to 2011 to 2012. This resistance zone existed between $1,800 and $1,920. After gold exploded in early 2020, it subsequently hit a new peak higher than in 2011, hitting an all-time high of $2,074 an ounce. Gold is now returning to the resistance zone to retest that zone. If the downside is limited for gold, does this give us any clues as to what the future holds for silver? Asks the analyst. The gold to silver ratio soared further during the coronavirus panic last March, reaching a new all-time high of 128 ounces of silver needed to buy 1 ounce of gold. The reason the ratio soared is that silver was being treated as an industrial product during the deflationary scare, and less as a precious metal. However, something important happened after the sell-off during the Western COVID-19 attack. As world governments moved to pass more and more stimulus measures, deflationary fears turned into future inflation expectations, and the gold and silver ratio declined, not only back to where it was before the coronavirus, but also because of below all the 2016 to 2020 trend. This trend break shows us that a new cycle had started in the market. After the trend break, the gold to silver ratio returned to retest the previous level. Again, textbook perfect price action has been seen as the broken trend leads to a retest, which then held as expected, says Aaron. According to this theory, silver should now be expected to outperform gold in the coming years. Interesting. And if the downside is limited in gold and the gold-silver ratio is broken down in favor of silver, what does this tell us about silver price expectations? Although the September sell-off was severe, silver has remained above ascending support, an area that has drawn buyers since March. For a myriad of reasons, buyers have been willing to pay higher and higher prices for silver over the past 6 months. The rule in technical analysis is, trends are valid until proven otherwise. Currently, this upward trend in buyers is approaching the $23 mark again. It is increasing over time. In addition, there is now a downward trend in sellers from the August peak, currently at $27 and falling over time. The uptrend for buyers and the downtrend for sellers will be fulfilled in early December, so there should be a resolution by then. If gold is to successfully retest its all-time high resistance zone and the gold to silver ratio is set on a downtrend for the next several years, then silver's resolution will be upward, and we will see that the prices will exceed the peak of $29.82 in early 2021. What could cause this higher resolution for the price of silver? Wonders the precious metals analyst. Our research says the analyst suggests that a contested election in the United States and/or civil unrest in the months following such an event may be the fundamental trigger that sets higher prices for precious metals in motion. Of course, a new round of government stimulus is likely to follow, resulting in an ever-increasing debt burden and larger budget deficits for the country. Money printer go brr. Investors should prepare for such a possibility now, and indeed, the price action in the precious metals complex suggests that many are doing exactly that. Silver prices are within a volatile consolidation between $21.64 and just under $30. As wild as it is a consolidation and follows a significant advance from the bottom of March. Analysis of other components within the precious metals sector shows that gold is now retesting its highest breakout zone of all time, suggesting that the downside is limited. The gold to silver ratio is still trending down in favor of silver. Taken as a sum, these data points suggest that silver should emerge from this consolidation in an upward direction before the end of the year, says Christopher Aaron. Thank you all for listening, for enduring this translation, for listening to my nasally voice, for giving me a chance because I'm not Junius. Thank you for all of that. I'm going to have to go lay down, but I hope you got something out of these 4 articles, and Junius should be back tomorrow with more videos for you. In fact, he already has a couple lined up. So again, thank you all so much for your support. YouTube hates us. We've seen a trend in perhaps being shadow banned and not reaching the audience that we used to reach. This is expected and normal from the Tiny Hat Tube. And so it truly helps when you guys like, share, and subscribe to these videos or get others to do so as well. You can drop these links in forums and chats, wherever it is that you peruse the internet, comments of financial articles, whatever it is you guys do. It helps. We thank you. We thank you for the donations. We thank you for the support. Junius does put a lot of work into them when he's home. And I'm also a pain in the butt to have as a wife, so round of applause for him. But anyway, have a wonderful evening, everybody. The ANCAT says bye. Bye. Bye, ANCAT. All right. Thanks for listening, you all.